Imagine waking up each morning with the freedom to choose how you spend your day, knowing your finances are secure regardless of whether you clock in at a job or not. This is the essence of financial freedom, having a steady stream of income that supports your lifestyle without the constant grind. But how do you achieve this elusive goal? What investments can generate enough cash flow to cover your living expenses while also shielding you from market downturns and inflation? Join us as we delve into the 5 critical assets you need to quit your job and gain true financial independence. These assets are not just about making money. They are your ticket to a life free from financial worries, a life where you can focus on what truly matters to you. Have you ever wondered what it would feel like to break free from the 9-to-5 and live life on your terms? Let's explore the path to making that dream a reality. This channel exists to help you become wealthy. I am committed to helping as many people as possible. If you want to get rich and want the best for your family, then please subscribe. I will continue to bring you valuable information every week. Thank you. Now, let's get back to business with number 1, dividend stocks. Picture this, receiving regular payments just for owning a piece of a successful company. This is the allure of dividend stocks, where strong companies share a portion of their profits with their shareholders in the form of dividends, essentially cash payouts. These dividends can be a powerful source of passive income, steadily flowing into your account without any additional effort on your part. The amount you earn from dividends varies by company, known as the dividend yield. For instance, while Apple's dividend yield is under 1%, ExxonMobil's is over 3%. This yield is expressed as a percentage of the stock price. So if you own a stock priced at $100 with a 3% dividend yield, you'd receive $3 annually for each share you hold. However, the dividend yield is just one factor to consider when investing in stocks. It's crucial to choose companies that are financially healthy and poised for continued success. Dividend investing is generally a long-term strategy unless you have significant capital to invest upfront. For example, to earn $1,000 per month in dividends with an average yield of 3%, you would need a portfolio worth around $400,000. This is why most investors view dividend stocks as part of a long-term plan. A popular approach among investors is to reinvest their dividends, allowing their investment to grow over time through the magic of compound interest. This reinvestment can eventually lead to a substantial and regular income stream. Even though dividend investing is a long-term strategy, it's an excellent addition to your cash flow. The income is passive and typically taxed at a lower rate than regular income. How would your life change if you could rely on dividend income to cover your expenses? Number 2, cash flowing, real estate. Imagine owning properties that not only appreciate in value, but also generate steady income every month. Real estate is often hailed as one of the best ways to build wealth, and there are compelling reasons for this. Historically, real estate values tend to increase over time. For example, in the early 1990s, the average house in the US cost around $97,000. Fast forward to today, and the median home value has surged to over $400,000. This more than tripling of value demonstrates the long-term growth potential of real estate. One of the most exciting aspects of real estate is the ability to acquire valuable assets without having to pay the full purchase price up front. Let's say you buy a house for $200,000. You put down $40,000 and finance the remaining $160,000 at a 2.5% interest rate over 30 years. Your monthly expenses, including the mortgage, interest, insurance, and taxes, amount to $830. However, if you rent out the house for $1,200 a month, you're left with a positive cash flow of $370 per month, or $4,440 per year. This means that with an initial investment of $40,000, or even less in some cases, you can control a $200,000 asset And the beauty of it is that your tenants are essentially paying off your mortgage, allowing you to build equity in your property. As the property value increases, so does your equity and potential profit. Real estate also offers various strategies to accelerate wealth building. For example, investors often use the increased value of their properties to purchase additional ones. Suppose your $200,000 property appreciates to $250,000. You could refinance the property, pulling out $50,000 in cash and use that money to acquire another $200,000 property. Now, your initial $40,000 investment has allowed you to control $450,000 in real estate assets, doubling your cash flow with 2 income-generating properties. Real estate investing can be a powerful tool for financial freedom. What if you could leverage this strategy to build a robust portfolio that funds your lifestyle and allows you to quit your job? Let's explore the next steps to making that dream a reality. Number 3, bonds. Bonds might not be the most exciting investment nowadays, often criticized for their lower returns and inability to keep pace with inflation. However, they play a crucial role in protecting your wealth, particularly during market downturns, a strategy that's especially beneficial as you approach retirement. Take a cue from Warren Buffett, one of the world's most renowned investors. Buffett advised that if he passed away before his wife, her money should be allocated with 90% in simple index funds like the S&P 500 and 10% in bonds. Finance professor Javier Estrada put this advice to the test using historical market data. Surprisingly, this straightforward strategy outperformed many complex retirement investment plans recommended by experts. Estrada further refined this strategy to maximize the protective benefits of bonds. We can't predict when the market will crash, but we know it will eventually happen. Having a plan in place is essential, especially if you're already financially independent and living off your investments. Estrada's approach involves a simple yet effective tactic. Monitor the market's performance. When the market is booming, withdraw your funds from the equity side of your portfolio, which will be yielding the highest returns. However, when the market takes a downturn and starts losing value, shift to withdrawing from the bond side. Bonds typically perform better during bear markets, allowing your equities time to recover in value. This approach prevents you from selling equities at a loss, maintaining the integrity of your long-term investment strategy. By integrating bonds into your investment portfolio, you can create a buffer against market volatility. How might your financial strategy change if you could protect your investments during turbulent times and ensure steady growth? Let's explore the next asset that can bring you closer to quitting your job and achieving financial freedom. Number 4, cash-flowing businesses. Imagine owning a profitable business without being involved in its day-to-day operations. Many lucrative businesses aren't listed on the New York Stock Exchange. These can range from physical establishments like restaurants, coffee shops, franchises, or even ATM machine chains to online ventures like apps or software companies. The key is to own the business, but not operate it, allowing you to generate income without the need for daily management. Operating a business requires a unique skill set that not everyone possesses. However, many business owners succeed by hiring capable managers to run their businesses, compensating them with a good salary or equity in the company. This delegation allows the owner to enjoy the financial benefits without the operational burdens. Investing in cash-flowing businesses can be more complex than other types of investments. It might involve starting a business from scratch and nurturing it until it can run independently, finding existing businesses that need investors or partners, or purchasing an established business or franchise. Despite the higher level of difficulty, this asset class offers significant advantages, including greater control over cash flow. As a business owner, you decide how much profit to take home and how to reinvest in your business. Owning a business also provides numerous tax benefits. For example, you can take advantage of lower tax rates on dividend distributions compared to regular income tax. Additionally, business expenses can be deducted before taxes, potentially reducing your overall tax burden. If you own a business with multiple locations, you could purchase a vehicle using the business's money for business-related purposes, such as visiting your stores. Since it's a business expense, you can buy or lease the car with pre-tax dollars. Always seek professional advice to ensure you comply with tax regulations and maximize your benefits. How would your life change if you owned a business that generated substantial income without requiring your constant attention? Let's explore the final asset that can help you achieve financial freedom and leave your job behind. Number 5, startups and growth companies. How many times have you wondered, what if I had invested in Amazon 20 years ago? How much wealth would I have now if I had bought shares in Uber or Netflix early on? While we can't turn back time to capitalize on these opportunities, the exciting news is that new companies with massive potential are being launched every day. Investing in startups and growth companies offers the chance to achieve extraordinary returns, although these investments come with considerable risks. Investing in startups and growth companies can be a thrilling yet volatile journey. These companies have the potential to revolutionize industries and deliver exponential growth, but they also come with a high likelihood of failure. Savvy investors typically allocate only a small portion of their portfolio to these high-risk, high-reward opportunities, fully aware that some of these investments may end up worthless. However, when you invest in the right startup, the rewards can be life-changing. Imagine being an early investor in a company that goes on to become the next Amazon or Netflix. Your investment could skyrocket, propelling you to unprecedented levels of wealth. The key to successful investing in startups and growth companies is careful selection and a well-thought-out strategy. To mitigate risks, many investors diversify their investments across multiple startups, understanding that while some may fail, others could achieve spectacular success. Additionally, investing in startups often requires a long-term perspective, as it may take years for these companies to realize their full potential. Aside from financial gains, investing in startups offers the excitement of being part of something innovative and transformative. You become a supporter of groundbreaking ideas and visionary entrepreneurs. Moreover, successful investments in startups not only bring financial rewards, but also provide a sense of accomplishment and contribution to progress. Have you ever dreamed of identifying the next big thing and riding the wave of its success? By carefully choosing and strategically investing in startups and growth companies, you could be on your way to turning that dream into reality. There's no reason why financial freedom can't happen to you. Get ready for money to start flowing to you like water. The way to make sure you're ready for this is to watch the next video about the 8 assets that are safer than cash. Go ahead and click on this one now, and let's build big money.